Go to Webinar Control Panel to allow all attendees to hear you. This system will notify you once you begin your broadcast. The broadcast is now starting. All attendees are in listen-only mode.
How about this microphone? All right, I got the mic going here. This is a good sign. Let's try the other ones. No, we don't have that going yet. Sound is not cooperating here. Hang on, guys and gals. Yeah, sounds good, but I can't hear. I'm going to put myself on mute for a sec. Hang tight.
Okay, let's put it here.
All right, I think I figured it out. We're going to start in about 15 minutes or so with David Katz. Appreciate you guys being here a little bit early. We have a huge crowd today, which is awesome. We have some newly injected market volatility these days, which is super cool.
I'm not.
Hey, David, are you there?
I am.
You're early also. Very awesome.
Had to make sure it all connected.
All right, I'm going to make you an organizer so you have superpowers here in the webinar.
Woohoo.
All right, you can see questions, answer questions, hear me talk.
Yeah, let me see. Yep, I got it. Questions. There we go. So good here. There we go.
For those who have tuned in early, we're going to stall for 15 minutes and give everybody a chance to get here on time. In the meantime, I'm just going to set up a chart book here, maybe. And we'll go from there. Just going to set up a bond chart book, U.S. Treasury bonds. Seems to be exciting thing to do. At least for me. Make it a continuous date rule volume rollover. Let's see what happens next. Downloading data. I'm using Kelly's machine. I haven't downloaded data here in a while. Wow, look at that. O2s on bonds. Shoo-hoo. What do you think of that? Let's add the last component of my setup here. Time price opportunity charts. They're actually known as market profile in the real world, but we're going to adjust it a little bit. I'm not crazy about the light. I don't know, green, I guess. Lime green. Do a couple other things here to clean it up a little bit. Horizontal lines, we don't need to see those. Extend value area, no. Extend point of control, that's a yes. Point of controls are powerful on a market profile chart. Point of control extensions. I don't like the blue though, so we're going to change it to red. And we're going to change it to dot, dot, dot. No, one. Oops, I changed the wrong one, didn't I? No, I didn't. What happened here? Where's my dot, dot, dot? It's not cooperating. I have something overriding something there. That's okay. You're going to get the point. Daily pointed controls. We should put some horizontal grids in here to make it easier for the folks who can't see like I can't. Squish this up a little bit. And while we're at it, let's just add volume by price. Onto this chart. Volume by price, another pretty good thing, although it's pretty close to market profile, but not always. So we're going to have to do some manipulation here. We got to make these. I'm going to separate for now. I'm not going to separate that. We're going to go to transparent mode. Let's see. Where's transparent mode? Highlight, extend, value area. There's so many different configuration ideas here that let's start from the start. Let's see. Volume, bid ask. Use transparent style. There we go. Yeah. Change that to like 75 maybe. A little better. Starting to build on this, right? Let's move this up a little bit. Actually, let's do some side-by-side configuration here on my screen. We're almost there, guys. Again, we're just stalling for about 10 more minutes. If you guys have any questions, my name is Jim Cagnina, by the way. If you have any questions for me, feel free to type them in. I'm using the Infinity AT trading platform right now. And I'm just setting up what we would call a chart book. And in my chart book, I have 3 charts. Keep it simple. 3 basic charts. We have just a daily bar. One tip of the day when using Sierra, instead of doing a daily bar, to 1,440 minutes. And then change the time from 1700 to 1600. That better reflects the 23-hour nature of the market, right? Because we open up at 5 o'clock Chicago time, which is 1700. And we close, we go all night, all day, and we close at 4 o'clock, which is 1600. You could do the same here for market profile. I think I might have already done it, though. Let's double check. Nope. 17, 16, 0, 0, apply. Okay. All right, so this truly reflects a day, a 23-hour day. Today's trading day started yesterday at 5 p.m., went all night, all morning, and it's still going until 4 o'clock this afternoon. That's how I look at it. So we have market profile on the right, which shows us a couple different things. This pink line, pink, red, I don't know what color this is, pink line in the middle is called the point of control. Each one of those bricks represents prices in 30-minute increments. It's not volume. It's the time of day. It's the unique 30-minute increment times of day that it traded at a given price, and it tends to show over time what prices the markets favor. And oftentimes we have what we call a normal distribution, Gaussian distribution. Let me just show you what I'm talking about. Bell-shaped curve, right? Sideways, but a bell-shaped curve. You see this gray area that represents the value area. And the value area is basically one standard deviation worth of prices, or about 70%, 68% really, 69%. But that's the value area. And then the prices in the dark blue at the top here are called prices above value. Prices below value are in the dark blue below. I'm going to erase that. Now, the interesting thing about the Treasury bond market is yesterday, which was here, it was a Fed day, right? And if you look at the prices from the day before, yesterday, and today, point of control is almost exactly the same. The market's priced happily, we would say. And then sure enough, we started breaking down today, 47.2. So I expected a totally different profile to develop lower tomorrow. I could be wrong, but that's my spider sense telling you what I think is going to happen in the bond market. And it's nice to see two, really nice normal distribution curves right around the Fed announcement, which tells me that the market was happy. It knew where the prices were. And you can go back in time and see other profiles, and you can see some of them aren't exactly symmetrical. Some of them are. This one's top heavy. This light blue is the opening range. This little red arrow is where it closed that day. The light blue histogram here, that's volume. And that doesn't, that's the volume prices at different volume levels or different volume levels for different prices as the day went on. It doesn't take into account a 30-minute brick like you see in the market profile. So, and it looks similar, right? Makes sense. You want to hit, usually the most volume is around the area where markets traded the most of the day. But, look at today, that's not true. Point of control still up high. Last night we were still hovering around up here a lot. And then when volume came in, it came in around 12, 147.12. So that's showing us a shift in prices downward in the bond market that I think is going to continue. How do you trade it? Well, the idea is, in a normal distribution day, prices tend to go back to the point of control, and there tends to be a magnet effect. And in non-distribution days, bell-shaped curve days, or when we have a trade a setup like it is today, where we're spending a lot of volume is down lower into the value area, then you could use that as your point of control reference, if you will. So that's just a simple kind of explanation of how to set it up, and a couple of really basic chart layouts. Dave is going to be much more sophisticated and go into much more detail on his topic today.
That was good, Jim.
Thanks.
That was good stuff.
Thank you. I appreciate that. I just, I grew up on the steps of the U.S. Treasury bond pit in 1981 or 2 or 80 or 83. I don't know. My mom might remember, but I don't. And we would literally sit on the edge and plot these manually with a piece of paper and a pencil and hand them to I was a clerk back then, and we'd hand them back to the guys trading in the pit, and they'd use this kind of technique. That and point and figure were the two things we'd have to sit on the edge of the pit and kind of write out manually when we had a new data point. But now with the magic, which is Sierra chart and the Infinity AT platform, the computer does it for us, and it's a pretty cool thing. So thanks for those kind words. We're going to get started, everybody, in 3 minutes. We'll have a influx of new folks pop in here right on time. We already have a really large group here today. Hopefully everybody's able to find the question box. Everybody feel free to answer questions. Deanne, we didn't start early. I'm just killing time. This is Jim Cagnina. Thanks for being here. Main event's going to start in a couple hours, but feel free. David's really good at asking questions, either during or at the end, depending on the flow of the event. He's an excellent presenter, as you know. Hopefully everyone's visited his website at TradingFibz.com. That's TradingFib. You know what? I'm going to type it in there. I like them apples.
Hey, you just had a gaffe. You said I was starting in a couple hours.
I did?
That's all right.
No, a couple of minutes.
Yeah. Hey, you got a question? They want to know why you left. When did you leave the floor?
I was down there, to the best of my memory. I went to college here in Chicago, and then I would work on the floor during the day sometimes, and then in the summers, even maybe in high school, I did that a little bit. And then I went on to graduate school after that, which put me in a little bit of a different path for a few years. So I was actually in the environmental management side of things for a few years before returning back here to the trading side. So it was just a matter of circumstance, getting a job offer after I got out of grad school and trying a different experience. So anyway, everybody always comes home. You could always go back home, and that's where I'm at right now. Been with Infinity since 2001. This firm was formed in 1996, and our specialty, our main focus is online trading of CME Group futures and Eurex futures, and that's our almost our sole focus. We do have a couple of system programs that you could find on our website, managed programs you could find on our website, if that is interests you at all. But mostly it's all about the online futures trading, swing trading, day trading, with the Infinity AT trading platform, which we're very proud of, and the associated Sierra chart. I do want to remind everybody, customers get that basically for free as long as you trade 10 round turns in a 30-day period, which is a pretty low bar. Otherwise, you're only paying $19.95 a month for the charting package. It's pretty sweet. I was just showing you it right now. It's come a long way. It could do just about anything you could think of. And the key here is that everybody here at Infinity is, or should be, but I'm pretty confident is a master on the charting, how it works, how to set it up, and has a deep bag of tricks that they could share with you. So feel free to reach out to your customer service rep here at Infinity anytime. Whether you're a customer or not of Infinity's, it doesn't matter. We'd be happy to talk to you. Whether you're a customer of David's or not, we'd be happy to talk to you. Try a practice account if you haven't already. We'd be anxious or eager to help you set that up if you would like. And see if futures trading is right for you. Remember, trading futures options on futures involves substantial risk of loss, not suitable for all investors and traders. Oftentimes in futures trading, you have a high combination of leverage and volatility. And although that could be an equation for opportunity, which is why we're all here, it's also an equation for risk. So be careful. Only fund your futures trading account with risk capital. My personal definition is money I could afford to lose, doesn't change my lifestyle, or overly anger Mrs. Cagnina. Now, I'm kind of tongue-in-cheek through that last part in there, but it's true. There's a lot of stresses in life, and you want to be sure that you minimize those as you go through activities such as this. The last risk thing I want to remind everybody is past performance not indicative of future results. So when you're out there surfing the web and you see performance results, most of the time it's a red flag. There's a certain regulatory proper way to show those results. A lot of people brag about their results. Just be careful with that. Even David might show you a winning trade today, and that's not necessarily indicative of what's going to happen tomorrow. So keep that in mind as you go through. If you're not sure where you're fit on the risk capital curve or thing, give me a call. My name is Jim Cagnina. I'll pop up my phone number and email address here later on in today's event. And that's it. So without further ado, David, we appreciate you taking time out of your busy schedule to be here with us live from Oregon. And as you know, David is TradingFibz.com. We'll talk more about his service and stuff he does. He is also a certified coach for the live trading challenge for us, and we really look forward to today's presentation. So I'm going to shoot the ball over to you, David, and get started.
Cool. Let's get the screen up. Let's see what we got.
Let me see, how do I do this here? I'm going to change presenter and make you the presenter. And by the way, while we're doing this changeover, it does say stop recording, which means I'm recording. So this will eventually be up on our YouTube channel later on today, or maybe tomorrow.
Okay, you should see my presentation screen. Everybody see that? You see that, Jim?
You look great, and I'm going to mute myself, and thank you, sir.
All right, thanks, Jim. Welcome, everybody. Happy Thursday, week 5 of the 2018 already. So great stuff to present for all of you today. And let me just take a couple moments. Hey, everybody. Go through the beg the indulgence for some of you who might be here for the first time seeing this presentation. For some of you, it might be a repeat, but that's okay. Always good to hear things again and again. All right, so again, I'll go through some of the risks, but really the bottom line here is trying to develop you guys a strategy for not just long-term trading, for those of you who might be starting out new in the trading world, but also with the upcoming live trading challenge, which is an exciting opportunity for traders like yourself who are using the Infinity AT platform, which is a very strong, robust platform. I'll talk more about that later, but really giving you an opportunity to test whatever strategy that you've been working on in a simulated environment for a week against other traders with obviously some prizes there to benefit your account and hopefully for the long term make you a successful trader. I just wanted to shout out here again, Jim had mentioned as a certified coach, if any of you have not seen any of my previous webinars, there are 3 that are located here in the archives here at the Live Trading Challenge. You just go over here to the practice page, go to the certified coaches, click there, and there's my 3 archives. Now, what isn't up there, and if you go to the Infinity Futures webpage, which actually has a variety and such a great vast amount of videos to support your trading strategies, whatever it is that you're developing, there's the 3 webinar series, and actually, which many of you have seen for about the last half a year, is the Murray Math levels used in your own trading. So that's something that maybe you want to view at the future date. That's where you can find them on the Infinity Futures YouTube page. Anyway, thanks again, once again, Infinity Futures, for allowing me this opportunity to share this knowledge of what I should say this is an old strategy which came forth, what many of you might be familiar with, my T3 strategy with the Heikinashi bars. But this is what started years ago, and I revisited this strategy and decided to use the Infinity platform, the AT platform, CR charts, to develop not only the charts, but to develop a strategy that would work for those that are looking for shorter entries or looking for how can I stay in the market when it's choppy? How can I make some trades there? And so this trading strategy is based on using volume-based bars. It can be used with a variety of different bars, which we'll get into here in a little bit. But really, I just want to make the clear distinction of while everybody has a choice of different charting programs, really CR Charts, the Infinity AT platform with their custom chart books from different traders has really been an amazing journey and path here. So if you're not on CR Charts yet, I recommend that you do at some point cross over, and obviously the customer support over there is 100% out of this world. So moving on, as far as myself, yep, thank you, Jim. Yeah, I moved from a couple of different places, living here in the Pacific Northwest in Oregon right now. I was raised in Chicago there, so once in a while I go back, visit, and it's good to have some good food back there. But up here in the Northwest, ground zero for TradingFibz in the trading room. which has obviously reached out to many parts of the U.S. here as well as the world. So pretty exciting thing I've been doing here for about 4 years now. As far as myself and trading, I have 17 plus years in the field of education. I teach at university level as well, but I simply was drawn to the market about 12 years ago and ended up developing this strategy that you're going to see here today. That was really the roots of where it began. But you know, we all try to chase that holy grail for some times. We're all familiar with that, and so I just wanted at some point to give that back as a teacher, and so I created my website. And after some trial and error, I came up with some methods to share with everybody. And so today I come to you now only with the lessons from the school of hard knocks of the market, but what really started with Fibonacci patterns and just always looking for simplicity. I think you guys know what a busy chart looks like, and it's always nice to simplify the charts. All right, so the disclaimer, yes, before we begin, let's please cover ourselves, reassuring you that informing you that trading is a risky business. Most important, today's performance is not indicative. Just because there were some winning trades today, which today was actually a very nice day, it is not in any way indicative of what's going to happen tomorrow, and you have to be ready for that. The official word from the Commodity Futures Trading Commission that covers all trading webinars, including this one today, that trading is a very serious business and almost the hardest thing I've ever done. Even if you have a 50-50 chance that it will go in your direction, it's a business of high and low emotions. And in my own words, I know you know this, but in case you didn't, I'm informing you and covering myself from you, blaming me for losing all your money if anything I share with you today doesn't go your way. This is for educational purposes to start. You will lose money in the market. The goal is to bounce back with discipline, not to revenge trade. Wait for your setup. Truth is, trading the stock market is tough. Never invest more than you can afford to lose. All right, now that we have that, let's get started, which really is upcoming, the futures live trading challenge on February 14th through 20th. So make sure you check that, guys, out. I can't check that out. I can't encourage that enough that you guys get involved. All right, many of you used to seeing me on screen, so there I am. Let's get right into the strategy, as many of you are eager to hear about. Thank you for that introduction. All right, so many of you are already familiar with the T3 strategy. Again, I'm not spending time on that today. We're going to be talking about a new strategy, or like I said, an old strategy. But again, learning to remain in the trend, the power of the Cagnina bars. Again, you can check out those webinars on the live trading challenge certified coach page, or at the YouTube Infinity Futures. But this is what developed from what I'm going to share with you today. And so many of you seen this presentation as well, as the combination of the T3 moving averages, learning to remain in the trend using support, resistance levels. Again, very powerful techniques in themselves. But as I had advertised for this webinar and willing to share with this information with you today, is that we know that markets don't always run like this, and we always have to be ready for markets that are going to run in a chop fashion, and that happens many days. Not all setups run away. So for instance, here we got a nice picture of the NQ using the Cagnina bars, the combination with the Flex Renko charts on Sierra charts. But sometimes we get into situations where, you know, I want to trade this, all right, even though you learned that you had this opportunity to run this all the way down, but not all setups are going to run your way. So looking for an opportunity to start trading in those areas is where I came up with the name S3, or we came up with, our trading room members came up with S3 instead of T3 for selective scalping strategy. Now, as you'll see as it progresses, this strategy does have the opportunity for a runner, for you to be able to even jump on one of these setups where price action is running away, and your runner will hopefully go in the direction of the trend without taking you out. But for the most part, when we enter into a market that's choppy and we don't have an opportunity to let those ticks run away from us, especially on a runner, what type of strategy could you use that would have a higher probability of a success rate and learning how to manage your losses and when the market doesn't go your way. So that's where we are today, and that's the strategy. The S3 selective scalping strategy, as you can see here on the chart, indicators as well as colored bars, moving averages, a VWAP, and then when I say simple, I mean keeping it simple. All right, so this is what we're going to cover today. We're going to cover the Sierra Chart AT platform and the bar period types that you can use to trade this strategy. The focus really being on volume-based bars today. The moving average crossovers, what do I do on re-entries? How do I use trade management? Can I automate this? Is this a possibility? And what is the risk reward of the strategy itself? All right, so a lot of times we ask is where is the volume in a particular day? So we have volume-based bars, which is an indicator of the bar itself, which is actual number of shares that are occurring versus the tick bars, which is the number of trades. So volume itself in the bar, it depends on your setting. But when we talk about volume in a trading day, I encourage, I mentor, I say, look, if you guys can get your trades over in the morning up until the lunchtime hour, Eastern Standard Time, I think you will all agree that that's where most of the volume sits during the day. We have pre-market action. Now, again, the S3 strategy, the T3 strategy, whichever one it is, if you're a 23-hour trader, there's opportunity everywhere, European markets or US markets, but in focus, really what I'm talking about here today is the regular trading hours. When that bell rings, 8:30 Central Time, 9:30, and wherever you may be, is that volume picks up good percentage of the time in the market where the US markets open at that time. And the goal is to really get that trade in, especially the S3 strategy, to get it over and done with and not sit through the market throughout the whole day. And so I might just use another chart that usually that AM session is usually best. You can see here, obviously overall volume in the market supersedes, and yes, at the end of the day, we tend to get a volume that does peak, but to me, that's a little bit more volatile towards the end of the day. Some will say the first 30 minutes can be volatile, but really, this is an opportunity to get in those initial trades during the day. And so I make the case that this strategy is in your advantage if you are able to trade the first 2.5 hours of the market, at least, or up until the lunch hour. And I think you'll have a higher success rate, not to say that there aren't entries throughout the day. All right, so what is the S3? First of all, as you saw, the chart is simple to set up. You can be done with this strategy as long as there's momentum, or you drop the volume bar to a smaller setting. We'll talk about that too. But you can be done trading the strategy within the AM session. And it does for some who just want to say, hey, you know what? I just want to make a couple ticks here to start. I want to make 20 ticks. I want to make 30 ticks. I want to make 10 ticks. I just want to start, feel successful. This is a nice strategy that will start you out. And it should keep you out of the chop, but it is really designed for choppy markets. So when I say it keeps you out of the chop, what it's doing is it gives you a strategy to actually trade the chop, and maybe that would be a better way of describing it. So sometimes the market has these long trends, and sometimes it doesn't, as I showed you in a picture. So it has something to trade between those long trends. When market, for instance, runs down 100 ticks in the morning, and then you just see all this chop at the lows, and you don't know what to do. You're like, do I get back in up? Do I get back in? Am I staying down? This gives you an opportunity to trade that as well. And as last you can see, one of the benefits of the strategy that we've never done before, or has been done, but we're progressing forward, is that the ability to be automated. And so I will talk more about that at the end. So let's go ahead. I want you to, first of all, just observe how I'm going to build this chart here. So let's pull up the AT platform here. And we're going to start with a blank chart here. And then you could obviously review this video so you can create the charts for yourselves. So go ahead and watch this. This is something you can build after the presentation and have something working for your trading strategy. Again, everything I'm sharing with you today is not just meant for for the short term. In other words, maybe some of you will participate in the live trading challenge. You'll want to try this this out in a simulated environment or on your own. But really, this is about developing a strategy for yourself, writing out a trading plan, describing all the steps that you're going to take to enter the trade, and then you know, over the long term, especially for new traders. I know we have some seasoned traders in here. Maybe this will accompany your strategy already. You have other indicators on your chart, but let's just go ahead and show you what we have. All right, so the first thing is we want to set up, it doesn't matter how many days you want to load. You can do this 90 days, 365, it doesn't matter. The most important part here is that in the chart type settings, again, the strategy can be used with different volume types or different strategy types, whether it's range bars, tick bars, Renko bars, Fibonacci bars. I'll show you some of those, but you want to choose the volume per bar intraday chart bar period type. And what we're going to start out with here on the NQ, we'll give you examples of NQ. I'll give you some samples of some settings for the ES today for those who like to trade the ES. And we are sticking to the candlestick bars for now, just to start with a solid foundation baseline. Your start time is midnight that covers the 23:59, and then your evening session you can cover when the markets reopen there at 18 o'clock to 9:29:59, right before the market open. All right, so we have a blank chart. We have volume bars here that says that every time the chart, every time a bar trades 1,500 shares, it will form a bar, and then it will start the next bar. So in those 1,500 shares, that's where price was. That was the range of the price. So for instance, on this bar right here, the volume of this bar right now is from 69.65 to 25, 69.70. When 1,500 shares have been traded within this price range, or if it goes up or down, the bar will then set, it will close, and then the next bar will form. All right. So we got our chart settings. So now we want to go to studies. All right. So we're going to create our graph here. And so the first thing we're going to do is we're going to want to put a moving average on there. And so we scroll down to moving average, and we are going to use an exponential moving average. So we add that study to the graph. And the settings that we're going to use on the moving average is that we want it to be an 8 EMA, 8 exponential average. Now, again, everything I say today is obviously something that you could be more flexible. If you're not happy with an 8 EMA, you could change it to a 5 EMA. You can make it a 10 EMA. That's up to you. But right now, this is the strategy that I started with years ago, which was successful in as far as the setting was concerned. So that is right now the platform, starting with an 8 EMA. Now, one of the things I like to do, you can change the color of the bar. That's up to you. I also uncheck display study name because I really don't like all the indicators up here showing all the names of the study. So I usually uncheck that. If you want to know the name of the study, you go ahead and type in 8 EMA. You can put the name label right here. And right edge means that once I apply it, if I keep to the right edge, it will be right there. If I keep it to the right, it will obviously be right next to the line itself, and that's good. All right, so I have my first moving average. The next moving average I'm going to apply is the T3 study. Now, many of you might be already familiar with the T3 study. It's the Tim Tilson moving average, a little bit smoother. And we're going to use, again, the same moving average. We're going to set it to an 8. And the multiplier, all right, is 0.79. All right, 0.79. I will go to the subgraph. I'm going to uncheck display study name. Again, same thing, name label. I'm going to keep it to the right, hit apply, and there's my T3 moving average. Now, one of the things you want to make sure is that on the T3 moving average is that you want to base it on a slope. And so what you do is go to auto coloring, and you can do based on slope, and then you're going to check for up and versus down slopes. And so it will be white and it will be red. Again, I can see the questions being posted here. I'll go back through the questions at the end and we'll answer those. And then we hit apply. And usually I like to make that actually a little bit thicker. So let me go back to that study here. And let's go ahead and increase the width of the size right here. And there we go. So we have ourselves a T3 moving average, all right, and an 8 exponential. And really, that's the basic foundation for the S3 strategy. And you're saying, are you kidding me? Can you really trade this? What's the indicator here? All right, so that's you just start that, you have almost 75% of the chart built right here. Now, what are some things we can do? So let's go ahead and see what I can add here. So you can see I've added grid lines. So to add grid lines on your chart, which is key. So if you go into the studies, right, we have no grid lines here. So where do we find that? We go up to the chart up here. We go to horizontal grid, and we can uncheck all regions. It's gone. And we go back, horizontal grid. You lay the grid. You could say region 1, which is obviously the study on top. And now you have grids to play. And why is it important for the grids? You'll see here as I talk about the strategy is that what we're looking for is we're looking for price action to be in momentum above the previous bar. And so grid lines can help us as it's an indicator here on the side. It's giving us prices. We could see that from 69 to 63 to 62 is obviously the point. And if we spread it out even more, we can open up the numbers. The spread here will actually go to quarters. As we obviously pull further apart, we can see it a little bit closer. All right. All right. So grid lines will help you, especially in knowing where the momentum is into the previous bar. So that's something you can lay on the charts. Now, there's also the option. So again, we have the T3 moving average. There's your settings, 0.70. All right, I believe that's what we had on the other one. Let me check again. I believe we had 0.0. I just want to make sure. So if I made a mistake there, I think it should. Nope, you're right. It is 0.70, not 0.79. I apologize. So it's 0.70. So make sure you change that. All right. All right. So the other two things that I like to have on my charts here is also the VWAP study. All right, so the VWAP, you can grab that from the left-hand side here. You just scroll all the way down. And that's the volume-weighted average price. And you can go ahead and add that to the right-hand side. And one of the things I like to do on the settings on that, all right, there's your settings for the VWAP. All right, make sure that your standard deviation is a fixed offset. That way, what you could do is you could see the VWAP standing out, as I'll show you right here in a moment. All right, they're the settings for the VWAP. All right, I have a line, I have a transparent fill bottom, and for the bottom band, transparent fill top. All right, and the VWAP is a line and it's dotted. And then you go to the settings and input, you can unhide the study, and now on the chart, what you have is you have a VWAP study, a daily VWAP. Again, price action tends during the day to a lot of times be attracted like a magnet, like a volume profile to that line. And so price action, it's nice to see, and that's what that transparent line there on the chart is for you to see where it stands out. Now, you don't need that transparent fill line. You can just stick in the VWAP line. It's up to you. All right, the last study that I like to have on my chart is a Globex. And now, a lot of times, Globex is usually based on time. So what I use is I actually use a Globex overlay. And an overlay means is that the Globex is actually coming from a minute chart. And so you might have a 5-minute chart in your chart book with the Globex settings. The Globex settings that I use. Let me go to another chart. Go here. So here's a, for instance, here's a 5-minute chart. I have the Globex high and Globex low. All right, and so on the Globex times, all right, the Globex lines, the start time is 18 o'clock. It starts when the market opens, and then 9:29. All right, and there's your study. There's your calculations. You can go ahead and put in Globex high. You can put in Globex low. There's your settings. You can type in the name, short name if you want. All right, but this is on a 5-minute chart. So in order for me to see it on the regular trading hour chart, all right, in order for me to see it on this chart, what I have to do is I have to click on the studies and I have to find the Globex overlay. And so the key thing is here on the Globex overlay is you have to click on the study to overlay. Which study you're going to look for? You're going to look for in the study to overlay. You're going to look for the Globex study, and that way now the Globex levels will be overlaid on your chart. All right. All right, so there's your basic chart, Jedi traders. It really starts with this. Now, one of the things that you can do also is, as you've seen, the difference between these two charts. I can go ahead and put the grid lines back up. That works. Is, as you see from chart 1 to chart 2 is that all of a sudden the green candles now are hollow. And so where is that setting? Well, the first place you can see is it's not over here in the graph draw type, because that's one place it might be. But what I do is I go up here to the chart and I go up to graphic settings on the chart and I scroll, I uncheck, usually this might be checked here. I uncheck that and I scroll down to look for candlestick upfill. Now, depending on your background, if the background of your charts is white, you want to make sure that the color is white here. So if I go ahead and make this green, you can see now that they're filled in. If I go to black and I click the background, now they're clear. All right, so it was really important that I sit here for a couple minutes and I just take you through the tutorial of how to set up the charts. Now we can move forward in showing you how the strategy is actually played out and why the difference between the color bars downside and the solid bars in the red and the clear bars in the green here to the upside. All right, so we built the chart. You can see here we have the solid candles upside, we have the solid red, we have the T3 moving average, which is sloping here. So if it's moving up, it's in the white, and if it's coming down, you can see here it's in the red. And then we have the green, and again, you can change that color. You get the 8 exponential moving average. You can make whatever it is you want labeled here on the side, and that's your chart. That's how we start. So how do we trade this? Well, first of all, I gave you the option, by the way, to change the colors between those two. So we went from solid green up to an identification of a hollow bar. Again, it's not going to change the strategy. It's just for appearances that differentiate what is between up and down. All right, so what did we do? We put an 8 exponential, we put a T3 moving average set to an 8 EMA. That's the first part. The volume-based chart in regular trading hours on the NQ, anywhere set to that 1500 to 2000 setting. If you're going to trade the Globex setting, you might want to take a look at maybe a 600 or a 750. Obviously, you're going to want to drop that down. More shares less shares are traded at night. So that's not something you would want, obviously, to be at a higher number for. And the ES, we'd say a range between 45 to 5,000 with an overnight number around 900. Usually I like to go 1/5. So whatever volume base you use during the day, you usually want to use 1/5 of that number in the Globex. Now, again, I said numbers are not fixed in stone. There's no holy grail number here. So each market, whether you're trading the YM, the crude, the gold, silver, wheat, they're all going to have their particular settings. So what you're going to want to do is you're going to want to find a chart where you don't get a lot of noise. In other words, there's a signal, there's a signal, there's a signal. That's going to be a lot of noise. You want something a little bit more tightened up so that once you get a signal on the chart, you take it, you trade it, and you wait for the next setup. And obviously, it's like if you're a 15-minute chart trader, if you go down to a minute chart, you know that there are going to be a lot more setups there than if you just waited patiently on your 15-minute chart. All right, now there is always an option for traders at night to go to a tick chart in the Globex session. For instance, you can go to a fib number, 144 ticks, which is a little bit better because you're not depending on the number of shares, because the number of shares can take all night, versus the tick is just simply the number of trades that took place, which might be more reflective of a Globex session. All right, so what is the trade execution? How does this happen? First of all, what we're looking for in a long setup is we're looking for, number one, price action to be above the 2 moving averages. We'll show some pictures here in a moment, but price action is above the 2 moving averages after they have crossed. So the T3 moving average and the 8 exponential moving average have crossed. And the T3, remember we did a red and white slope, all right? So to the indicator that the white is going up and the T3 moving, the price is above the moving averages, they've crossed, and the moving average is sloping up. And obviously vice versa for going down on the short. The key here is for the candle has to be across the 2 moving averages. It can't just be above the 8 exponential, but it hasn't crossed the T3. It has to be above both. Whether the candle is red or green, it doesn't matter. It's just a matter that it crossed above the 2 moving averages. So whether your candles are filled in or whether they're not, it doesn't matter. What matters here is that price crossed over the moving averages. And so now we have a long trend or a long setup over here. And here we can see that price action, the candles crossed below both moving averages. And we can see here that the moving average is sloping in the red. Now you're saying, whoa, look at that bar right there. It crossed below both moving averages. That bar closed below both moving averages. But what did I say? I said that the slope of the moving average has to be red if you're going short, and the slope of the T3 moving average to go up has to be white or whatever indicator. If you want to make this green, that's fine. Just I encourage you to make then your 8 exponential moving average a different color. All right? All right. Now, here's the key. What bar are you going to use? Because if you look at these charts, you can say, well, that's great. All those bars look like a possible entry. So how many ticks above or below am I looking to enter on? So for markets that trade in quarter points, for instance, the NQ, right? The ES, all right? What you're looking for is, I'm sorry, I actually have a little bit of a mistake there. I'm gonna have to clarify here because the NQ does trade in quarter points. And so what you're looking for is 2 ticks above or below, depending on direction, the close of the previous setup bar. So I do have a mistake here because the ES, you're looking for 2 ticks. And for the NQ, we're looking for 5 ticks. That's the only difference there. So, so that's key here. And so now markets that trade in 10th points like crude and the Russell and the YM, you would also look for 5 ticks. So the NQ falls into this 5 tick spread from the previous bar, and ES is simply 2 ticks. All right, I will show you that. I will show you what that looks like right now. But you always have the option to enter above the high of the bar and not the close of the bar, and I'll make that distinction. All right, so here we have a chart where we see price action crossed over the moving average. All right, the T3 moving average is sloped up. And so candle 1 over here, why is this not an entry? Because the T3 moving average set to an 8 EMA is not in sync. It's still red down here, so that's not an entry. Now, remember what I just said? I said it's an option for you to enter once that bar is closed on the next bar, as long as price action moved above it. All right. Candle 2 closes a minimum of, what did I say in the NQ? It has to be 5 ticks above, and that's the reason for the grid lines. The grid lines is to help you identify where is 5 ticks above the previous bar. So bar 2 here closes a minimum. It does. Bar 2 did close a minimum of 5+ ticks above the previous bar, but the T3 moving average is still changing the slope, so there is no entry there. Now candle 3 here closes a minimum of 5+ ticks above the previous bar, right? But I have a general rule. And my general rule is that if a volume bar is more than 6 points, all right, a 6-point spread, if it's 6, 7, 8-point bar, I'm not going to take it. And so there's no entry on bar number 3. Now that's the rules that I've come up with. You could have taken an entry on bar number 2 just from the fact that it closed above bar number 1. But remember, the T3 moving average is not in slope yet. So where is the highest probability scalp setup here, S3 setup? It's going to be bar number 4. And the reason is number 1, bar 4 closed a minimum of 5+ ticks above the previous bar number 3. The T3 is in slope, and you have an entry confirmed to move to the upside. And that is the basic strategy, all right? We're not talking about a runner here. We're talking about a successful, I feel good. Hopefully it runs in my direction because there's momentum there to get in and get out. Now, there is a strategy that I'll explain here towards the end that allows you to have that runner, but I'll explain where and when that time is appropriate. But that is the basic strategy. Now, had bar number 3 not been a 6-point volume bar, what if it was a 3-point volume bar? Then that would have been your entry. Bar number 3 would have been your entry. Okay, so if you're using higher time frames, remember that you're going to want to use higher values for your entry. So, number 1, the best setups, all right, the best setups will always be on the initial moving average crossover. There's always going to be re-entries. We'll talk about that, but the best setups are going to be when moving averages have crossed over and those first bars that are going to give you a possible entry, all right? Best setups will be on the initial moving average crossover. I can't help but just make that everybody understand that that's crucial, all right? All right, always watch where the candle closes in relation to the moving average. That's very important. Remember, you want price to be above the moving average. Make sure you wait until the setup candle closes. Always wait until the candle closes to make your entry. The T3 moving average should be in slope, and if it's more than that 6 points, consider waiting for the next setup candle. All right. Now, there are some options. Some of you might use MACDs, RSI, CCI indicators, the variety of different indicators that you have on the Infinity platform. You have the opportunity, and I'll show you some of those, time-based volume at the bottom of the chart. All right, a good indicator of when the intraday setting might drop. All right, you can put a volume count down or up on the chart to say, hey, this bar is about to close. How many shares have been traded on that actual bar? We can actually use a color indicator for the entry candle. So if the bar is closed 5 plus ticks or 2 ticks on the ES above the previous bar, all right, all of a sudden that bar will give you an indicator, a color, to indicate that that is a good setup. All right, and I mentioned before you can use VWAP and Globex levels. You can actually have a setup candle warning that says if it's beyond that 6-point range or whatever you had decided to be, it gives you a warning. All right, so there's an example of that volume setting. So I have this at the bottom of my chart. All right, it's obviously coming from a minute base or 5 minute, 1 minute, it doesn't matter. I use a 5-minute base chart. I have a volume bars at the bottom. All right, and I use the study price overlay. So on my volume chart, I'm pulling this information from another chart, from a minute chart, and I can see here, this is on the NQ. So when, that's right, you noticed in the morning session when that volume is high, all right, I got volume hitting above 9,000, has nothing to do with the candle. It has to do with the overall volume in the market. All right, that's going to tell, that to me is an indicator on my chart that for the NQ, I'm going to have a 1,500 to 2,000 volume setting. But as time progresses through the day, and I'll show you here in a little bit, is that as the volume in the market slows down in the mid-session, I might want to drop the setting. And I always wait for the bar to close on the volume to see where it is. And then I'm seeing, obviously, as the progression moves throughout the session, that maybe it's appropriate for me to drop down to 1,000. All right, so that's one of the options to put at the bottom of your bars. Which brings us to the point of all those options are what we call enhanced options on this strategy. The S3 strategy, remember, same strategy here. So we have the volume bars at the bottom. You can see here, as the volume degraded through the morning session, it wasn't hitting above that 9,000. You might want to switch your setting. And you can see here, not only do we have these indicator arrows, all right, so this is an enhanced option that gives you, that's right, that's telling me that that is the first bar that is meeting my criteria for a setup. Not bar number 1, because the T3 slope wasn't in sync. Bar number 2 starting to look good because it closed 5 ticks above, but the T3 slope is not in sync. Bar number 3 is great, but if you'll notice, it's a little bit darker color than the other bars here, and the reason is because it was more than a 6-point spread. That is a volume warning candle. And so number 4, there's the signal, bang, the bar closes, right? You always wait for the bar close, and you're in the trade, and you take the trade. Are you looking for 5 ticks, 10 ticks, 20 ticks? That's all up to you, but that's the indicator bar to take the entry. And you can see already a little bit later here towards the European close, we had another signal, right? I mentioned that before. These all look good, but that bar was colored. That's a color indicator, and that is a beautiful enhancement to the chart that allows you to identify what is a strong momentum probability. Now remember, everything I'm saying here today, there are going to be candles that you had a setup, you were on a different volume setting, it worked out on a 1500, but it didn't work out on a 750 or vice versa, and all of a sudden it becomes a loss. And I'll talk about stops here, but you always cut your stops short, and you just wait for the next setups. Okay. Now, I also mentioned there's different bar types you can use. You can see here, these are the volume bars on the left. We have range bars. We have tick charts. We have Renko bars. You can use 5-minute bars. The same strategy is going to work on all of these. It just depends on what chart type setting is comfortable for you. For many of you are familiar with Heikin-Ashi bars. Here's an example of, on the left-hand side, I have the volume bar setting. I also have the Heikin-Ashi bar setting. And you can see here, most of it follows the same trend, so there's no difference in trend. The moving averages are the same. All right, the only difference in here is that I could see on Heikin-Ashi bars, the HA bars tell me what's in trend and what's stalling. So maybe on this signal here, I don't take the setup, or I do take the setup. On the HA bars, I wait till the next bar because that is a trending candle. So if you're familiar with HA bars, this might be a possibility for you too. All right, so let's jump into stops. And I just mentioned, that's right, stops is important to have in trading. Now, many of you are already familiar, comes from my Fibonacci trading, point C. If you're familiar with Fibonacci setups, point C, swing position is my stop. Now, for many of you, that might be an uncomfortable place. Where is that? That's right down here at the bottom, swing position stop. Remember, we said bar number 4 was the setup stop, was the entry bar stop. So you have a range of where you can keep that stop. You can keep it all the way down here. You can keep it all the way at the bottom of the entry bar stop, or what I call anywhere in between. You can keep it at the moving average. That's going to be based on everybody's risk profile and where they want to keep a stop. Note that sometimes you're going to get a setup bar and the next candle is going to start to move up, and then you're going to get a tail. It will take you right out on the entry bar, but guess what? That candle's still moving up. That's going to happen. So you got to give yourself a little bit of a range, especially when it comes to futures, Jedi traders. You just have to. But it also has to come down to your account size. And this is a great strategy for those maybe have smaller account sizes, want to feel successful. And for those that, you know, maybe you have a bigger account size, you still want to trade that chop. You can afford maybe a little bit more risk on your stop. It doesn't mean that if this doesn't work out, you're going to let the candles come all the way down here and then you're going to wait for your stop. It's just there for, it's your insurance in the trade. So anywhere in between here is your stop. Typically, if I enter a trade, I already have an automatic 25 tick or 20 tick stop placed on the chart. All right. So what is the risk reward? A typical question obviously is going to vary with the time frame. A higher time frame is going to have a greater risk. All right. But really the bottom line is you are risking, for instance, on the ES to make 1 point. All right. To make 1 point on ES, you're going to be risking about 2 to 3 ES points. You can't sit in a trade. Well, you can, but you're going to risk only 1 tick to make 1 point. You're not giving yourself a lot of room. So that's typical on the 4,500 share chart or volume-based chart, okay? So somewhere in between is what I recommend, all right? My philosophy is keep the stop further away, but always, always, always be ready to flatten it. Have your mouse right above that flatten button, all right? But trust the momentum of the strategy set. Always option to bail out. For instance, that bar starts going up, the next bar starts coming down, it closes, it's not running in momentum. Feel free to bail on it. You can always cut it short and just wait for your next setup. All right, trade management, the fun part. So let's say on the NQ, all right, I have my bar setting set for 2,000 shares. All right, 10 ticks per trade is going to equal $50, and I'm looking for an in-out strategy here. That's what S3 is. It's getting in and out, trading the chop. All right, no runners here. simply looking for maybe 20 ticks a day. You're happy. We have traders in our trading room who are happy with 20 ticks. There's nothing wrong with that. You do the math. When you add that up, all right, that's $100 a day, obviously, trading one contract. So obviously, sometimes your trade's not going to work out. So you're going to have to go back in. You're going to have to make another trade. But once you're net 20 positive ticks for the day, you're done, if that's your goal. Yes. You have your chart set to a 4,500 share volume bar. You're looking for, that's right, 1 point per trade. You're looking for 2 points per day. 2 points to start on the ES. Sometimes I know that's sometimes very frustrating just to make a point on the ES. All right, I'm not a big fan of the ES, but I'm not saying you can't trade it. I particularly like to look at NQ. I haven't looked at the YM for a while, but those are markets I feel more comfortable with. All right, you could trade the 6E and the 6J. Those are $6.25 a contract, up to crude, gold, and $10 a contract as well. But just for the ES, you're looking for 2 points. You want to only make 1 point in, out, you're done. Again, it might take more than one trade. You might take a loss on one trade, but once you're net 2 points for the day, you're done. Remember that volume. You want to get those trades in the first 2.5 hours, but if you're going to sit there all day, that's cool. Continue trading, wait for your setups. Just change the volume setting. Don't be sitting on a 4,500 share per volume bar. You might want to take that down a little bit. All right, so the progression here that I recommend that you all start out with is one contract, right? You're looking for 2 ES points. That's $100 a day, we said. After 1 month of consistently making 2 ES points a day, you can then go to 2 contracts. Why not? You've been doing it with 1, so now go to 2. All right, it obviously increases the percentage per day. After 1 month after that of consistently and profitably trading 2 contracts, this is where you can start to get into runners with 3 contracts. All right. So if you're trading those 3 contracts now we can talk about runners. And a runner on a trade management can be set up so that once you get those first 2 contracts off, or maybe you take off 1 at half a point, maybe you take off 1 at a point, you now have that 3rd runner. Using tight trailing stops, whatever you do, I recommend after those 2 are taken off, you move that stop to break even. And so on trade management, that would simply be setting up, for instance here, where target 1 would be 5 ticks, target 2 might be 10 ticks, or you take both contracts off at 10 ticks. All right, and then your 3rd one is going to be a runner. And so you make sure that you set up on your trade management, break-even level is 0 once trade is moved to 10 ticks. Now, I also recommend is using baby steps here. All right. First of all, understand your setup. Stick to your strategy, write out a trading plan. Simulate this for 1 week. You guys have a live trading challenge coming up. Try it out on there. All right. Once you go live, you're looking for NQ. You're looking for 5-tick moves. I can today here, for example, I'll show you a chart today. Here's the NQ this morning, set to a 1500 volume charts. All right. It was a great morning for S3 strategy. There was one trend today. All right, one trend today where the S3 strategy and then the T3 strategy worked out really nice, where you had all in sync, everything based on my other strategy. You could have played that, or the whole morning session, the S3 strategy really played out well. And you can see here, all these moves indicated by the arrows all came up with 5+ tick moves, minimum 5-tick moves. All right. And so you start out with 5, you can progress to 7 or 8, you can go up to 10. Maybe you're comfortable with 5-tick moves, you never want to move beyond that. That's up to you. But you can progress up to 10 ticks, whatever it is that you're looking for. It's all a matter of coming down to following your strategy, being consistent, and not changing your trading plan. All right. You can move up to trade 2 contracts at some point to be comfortably profitable. And then you can progress up to 3 if you desire to trade with a runner. So you can progress into that T3 kind of trend where price action might run away, and all of a sudden now you have a runner. So that's the beauty of this S3 strategy in being able to ride a trend. All right. Are there going to be reentries? Absolutely, there are going to be reentries. So it's simply just waiting for the next setup. So what does that look like? All right. I'll show you here in a minute, but beware, if you keep going into re-entry, somewhere along the way, you're going to run out of steam. So always watch for setups around Globex levels. Watch that VWAP. A lot of times price action is going to stop right there like hitting a wall. And so you might want to wait for price action to move beyond that VWAP. All right. So consider going for less amount. So let's say your first contract, you're going for 10 ticks, but as you have re-entries up the line here, all right, maybe you're going to go for smaller amount. Maybe you're going to go for 5 ticks this time. All right. So here's an example of re-entries. Here was your initial setup. All right. You took a couple ticks on that. All right. 5, 7, 8. And then what you can see here is you had pullbacks. And I think those are really beneficial as you see a pullback and then you see a bar up. And again, this is up to you. Once you see this colored bar here, that's an indicator that price action is still a momentum and you could jump on that. All right. I particularly like to wait for 2-bar setups and then jump in. 2-bar setups and then jump in. There's that VWAP line. Lots of times it can stall. So if I had a setup right here, I might wait until price action went beyond it and then take the setup. All right. So I know you all want to hear about this part, which is the automation part. So all of this can be done manual. You're uncomfortable with anything doing anything for you. You can trade the strategy with what I've set up for you today, the manual setup. But let me all be very clear here. Automation does not mean that you walk away and let it run. It doesn't mean you turn it on, you go to work out or whatever you do in the morning, you come back 2.5 hours later to see how you did. The advantage of the automation is that once that setup bar closes, the entry will be automated. So you have that slight edge over, should I take it, should I not? You're trusting your strategy. You have all the parameters already set up, and that momentum usually will catch. Sometimes there's going to be a spread. The automation won't pick it up on the first tick, but it will become pretty close, sometimes even closer than you hitting the manual. You always have the option to shut off the circuit breaker on the automation. All right, you always have that option. All right, what does the automation have? It has all these features to mention. Everything that I talked today, being able to modify those. You can have the volume bar countdown with the VWAP rule as well. Only take trades that are above the VWAP in direction of the slope or below. All those things can be turned off. And so on the automation here, this is the strategy. This is the platform that we use that you just saw. You can see the volume bar countdown in the upper right-hand corner. We have the arrows indicating the setups. All right. The arrows are only going to take the trades that are the initial crossovers, like I talked about in the beginning. Any subsequent re-entry, that's a manual trade for you. All right. And by the way, on the charts, just so you know, where is the turn off for the circuit breaker? It was right here. Auto trading enabled, global and chart. You simply turn off global. That's the main circuit breaker, and now auto trades. The auto trades will stop. All right. And if you feel uncomfortable, the trade is sitting right at the VWAP and you don't want it to take, you haven't made your goal for the day. Again, what I said is those goals can be set up for you if you want. But let me be clear again, does not mean walk away and let it run. It's just an enhancement to give you that edge. Once you've made those 20 ticks, if that's your goal for the day, auto trade shuts off. It depends on what you set it up. If you set it up to make $100 a day, the auto trade will shut off, and that's it. All right, so a really nice addition after all these years to have this automation. So Heikin-Ashi bars, again, you always have the option of trending using that T3 and S3, right? There's a variety of different candles that many of you are familiar with. The Heikin-Ashi bars, I haven't given up on it. I still love the strategy. I love what it tells me. So it can be S3 on the left. It can be T3 on the right. They're both showing indicators of trend. Only one setup here for a scalp, one setup for a scalp here. You can learn to take re-entries. You can learn to have a runner on this. All of that is built in. If you progress from 1 to 2 to 3 contracts, you can also benefit from learning the T3 moving average as well. Many of you are familiar with the MML setups. All right. This was yesterday's chart. Beautiful setup here at the lows off the oversold of the MML. Gave you a setup right here, mid-morning session, T3 moving average and slope. You could see the VWAP pullback here halfway, and then ran all the way up to the MML. So, you know, maybe there's an arrow indicator up here, and you say, maybe I don't want to take that because it's right there at the MML high. So you can make that a benefit for both. You can even usually for fib projections, all right? Fib projections work on higher MML time frame. So you can, again, what I'm trying to say here is you can combine this S3 strategy with anything else you're looking at it. But the bottom line, the goal is it's an in and out strategy that you progress from 1 to 2 contracts, and then the ability to trade 3 with a runner that moves right to break even. I want to mention something because I just thought about this morning, and I encourage some of our traders, is that if you're on the NQ, all right, for instance, you're on the NQ and you're looking for 10 ticks out of a trade, and price action runs 5 ticks, you always have the option, that's the power of the trade management on Sierra charts, is to move your stop to break even. So what happens if it goes 5 ticks and then comes back down and takes you out? Not so bad. What if it goes 10 ticks, all right, and it doesn't fill your order and then comes down and you take a loss on it? Either way, you should protect that trade by getting that stop to break even at some point. So that's always an option if you're trying to go for more ticks, is move that stop to break even once price action runs away. All right, so what have I learned about this strategy along with the members of our room? First of all, best setups have usually been in the first 60 minutes or the morning session. If you met your AM session goal, walk away. If you feel like trading all day is what you like, drop that volume. All right, drop that volume so you can trade all day. If you're using automation, please do not walk away. Use it only for the edge, and know that trend, you saw the chart here, right? You saw the chart, right? Any of these charts, eventually the trend's going to stop. It's going to run out of steam. All right. Add contracts once you're achieving those daily goals. All right. You could always lessen the tick size. You could increase the contract size. And there are going to be moments where you're going to be stopped out. A new setup forms in the opposite direction. Don't be afraid. Just switch, stick to your strategy, and just switch directions because you have a setup, not because you're revenge trading. Now, one last point, data feed. So I have a live chart. I have a live chart on my laptop here. You might have, you know, you look at another platform. You might have sim platform, and you're all of a sudden, sometimes chart to chart, you're going to have different data feeds here coming. So one of the things you might want to just focus on is you're not looking at this chart to take the entry. You're looking at the chart. You're looking at the strategy on that one specific chart. That's where you take your entry. All right. So stick to the chart you're looking at. If you have a variety of different charts you're looking at and you see that the volume on this bar is slightly off from that volume bar, all of a sudden that one has a signal and that one doesn't, stick to the one that you're trading on, and that's where you take your entry. All right, and that's just the nature of the industry. It will be the nature of from live to a simulated platform as well. And as I always love to wrap up these presentations with, I love the 7 Deadly Sins by Harvey Walsh. It's a great free publication out there. Really reemphasizes what it means to be a prudent and a solid, competent trader. So you can check that out online. It's free, and you all know the holy grail of trading is not the S3 strategy. It's not the T3. It's not the Murray math and whatever is out there. It really is patience and discipline and waiting for your setup. Now, I want to just take a moment because it's really been an amazing 4 or 5 years having a trading room. It's incredible to have the members in our room who have really come forward and done a lot of great work. A lot of times I'll call out to the member and say, I got this idea, let's see if we can put it on, and traders will step up who've got a vast amount of programming, data programming and IT background. And this really is a shout out to Brad Hauser in our room, who has taken this system from what I had years ago, and he took the thoughts in my head because he has that background, and he was able to not only use the Infinity AT platform to make that possible, going from that basic chart that I saw, that I taught you how to build today, to the colored bars, to the automation. He's the one that has gone and built this program up to be just that. And so the automation, the color bars and all that for the Sierra platform are available through his website, forgivingcomputers.com. He put a lot of hard work. He's got a great manual to go along with this. He's got spreadsheets. He'll build platforms for you based on what market you want to choose. But as far as T3 moving, as far as TradingFibz members, if you're a member of our room, there is a free version which you can get, or not a free version. Well, there is a free version, but the automation comes at a very much reduced price, and I think it's very fair what he's done. But I'm just going to shout that out to you. There's his email address, forgivingcomputers.com. You can check it out. You can also go to my website. You go to the education page over here. You hit the S3 strategy, and you scroll down in that, and there's a link on that page that will take you there. Okay, so let me make sure I covered it all, and I believe I did. I know we went a little bit over, but I think we did good. I know that there's a lot of questions here probably. Let me just pull up the chart book for a second, because I know there was a lot to show on the presentation, but I just wanted to again show you the platform here. And what an amazing morning. I told you guys there were a lot of setups. The arrows have disappeared because the goal for the NQ was already met here on this platform here. So those arrows have already been taken away. So again, I encourage you guys, check out my Twitter feed, Stock Twits, for these charts, always promoting Infinity stuff, especially the Infinity Challenge. I highly encourage you guys to get on board for that. And you could test out 1 contract, 2 contracts. You could try the 3 contract size if you're trying to go for that win. But again, I'm here to encourage, especially new traders. This is a solid strategy to get you in, get you out, feel successful, get your ticks done for the day. And you could practice this the rest of the day, practice sim. And then, you know, eventually maybe you're going to just want to be an all-day trader and feel confident in a strategy. And there's a great example, by the way. Perfect. You see the volume right here. You see this, guys? You see how the volume was much better in the morning, and as the session was going down, you got to, at some point, you have to realize that the volume is going to drop, and so the volume on your chart should drop down. So right now I have the 750 to 1,000 range, so you can see 1,500 up here in the corner. So I'm going to drop the chart down to 1,000. All right, and so now I can see that there might be more possible setups. But always remember, some things will just not get you 10 ticks, but it might get you 5 ticks. All right, let me put that page right back. There it is, forgivingcomputers.com. Again, a lot of different variety programs. He's got the manual. He's got the automated version as well. And then if you're a TradingFibz room member, you get all this at a discount. So if you're interested in joining us and seeing like-minded traders who are using the Infinity platform, feel encouraged. Again, this is only been written for CR charts. So if you use NinjaTrader, you got that basic platform. But I'm going to tell you guys, I highly encourage you guys to get over to the Infinity. And so there is a plug there to get over to Infinity AT platform, because I know this will hopefully not only change, but hopefully make you successful traders. Okay, I see some questions. Thank you for digging the beard here. That's my Northwest look here. Do I use volume profile or Murray math? So you can use this with it. I don't use volume profile. I do have charts that I look at, like Jim had at the beginning. So I do tend to look at those from time to time where VPOC is, but it's not part of the trading strategy itself. Robert, the setting for the CL right now, I do not have exactly that setting. I have right now on my charts, I have it set at a 4,000, but I don't recall the number I had it. They're already built into the programs for Brad, so you can always change it. One thing I want to say is, for all these that are here, is that if you end up using this and you say, yeah, you know what, I found that the 1750 works on the crude, go ahead and email me, text me, tweet it to me to know that you know, that's a much better setting. You're having a lot of success rate. So that part of the strategy right now, we're kind of playing around with what is really the best setting. I think the best setting is really for you, not really a global setting, because if I say it's 1750 and then you're taking losses on it and you'd rather be on a 1500, it's important what you do. But go ahead and give us a shout out to let us know what's working for you. Sorry, Howard, I know I had a lot of information to cover. So this webinar will be available through Infinity Futures and their YouTube channel. Our stops on my computer, that stops are on your computer based on where you place it. So if it hits your stop, it hits your stop.
Hey, David, if I could pop in here.
Yeah.
So with us anyway, when you place a stop order on the Infinity AT trading ladder, that goes to the exchange.
Yeah, that's what I mean. Yeah.
Yeah, I just wanted to make that clear because everybody gets a little confused on this. But you place it on your computer, boom, it goes to the exchange. You get an order ID number, it comes back. You'll see it sitting on your dome, and you could just simply right-click it or to cancel or move it or keep it to whatever you want. But a lot of people are like, hey, where's your stop? Is it at the exchange or at a server somewhere else? And the answer is no, it's at the exchange.
Right, thanks. Yeah, I mean, I should have made that clear. Yes, you see the stop on your own computer, but it's sitting on the exchange. So if your computer went down, the stop is still in play there. Okay. This is set up work with equities. I have not tested it, but yes, it does. The address for my room, just go to TradingFibz. You can email me, guys, david@tradingfibz.com if you have any other questions. Thank you for, Paul, thank you for the shout out there. So Fred, mostly I enjoy the NQ. That's my go-to. So it's up to each individual, but this strategy will work on all of these. The effectiveness of swing trading stocks. I'm not particularly talking to that today. I'm talking really to the point of being able to really get in, get out of a strategy here today. But thank you for the question. As far as swing trading, if you were to trade this on a 4-hour chart, which would be probably another webinar, it does. It works for 4-hour strategy. But remember what I said in the beginning is you're going to need a wider stop, obviously, because use the same chart, just build a 4-hour chart, and instead of going for 1 point, you're obviously going for more points upside. So yes, I would highly encourage you to, if you're looking for that, is to test that out, but it can work on a higher time frame. So VWAP tends to be volume weighted average price. It tends to be where it's kind of like the mean. That's where it's like a VPOC. It's where price action tends to always draw back to as a line of support or resistance in the market. Okay, that's all the questions I have here, Jim. I think I've covered it all. There was a lot of solid, good start for many. I hope they'll use it for the. Joe asking market order entry. Yes, it is a market order entry. It's not a limit order. It's not a limit order. So it's a market order, especially if it's automated. It's going to be right in like that. And we've been using it in the room. Some traders have been using it sim because they just started with it, and live as well, and it's working well. So I'm not going to sit here like Jim said. There are going to be traders out there that are bragging that it's win, 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 win. It's not win, win, win. Cut that loss short and then get back in and wait for your strategy and set up again. I'm getting questions, Jim. Everybody wants to know where my hat is. It's right here. I took it off for the performance. So all right, Jim, I think we're done here. You probably, where are you?
Nope, I'm here.
There you are. Okay.
Let me first and foremost, thank you for going above and beyond the call of duty today. It's been going over an hour. Greatly appreciate you volunteering your time today. And also, equally as important, if not more, I'd like to thank everybody who attended today. for actually attending, and hopefully you got a lot out of it. I'm just going to leave you with the Infinity AT trading screen up here. I'm sorry, Infinity Futures website up here. I want to remind everybody two things. One, remember trading futures options on futures involves substantial risk of loss, not suitable for all investors. Secondly, if you do want to try a real-time practice account, the same one you'd get if you open up a live account, real-time charts, the same one you'd get if you open up a live account, go to our webpage here at infinityfutures.com and simply click on the Learn More button. And also, as a follow-up to that, if you are interested, I'll be happy to walk you through. One of our guys here will be happy to walk you through how to use it, how to download it, and all that stuff to make it as easy as possible. So that invitation is outstanding. And lastly, as a last little cleanup measure here, our YouTube channel will have a video recording. Where's our YouTube channel? Go way at the bottom. You see a little tiny YouTube thing here. And this channel will have prominently displayed today's event. Feel free to subscribe if you want instant updates when we do update our YouTube channel. We have a lot of really good stuff on it. Otherwise, just check it out at your leisure. So that's that little tip, factoid. Having said all that, everybody have a great trading day. David, again, my deep appreciation for your help today. And check out Trading.
As always, let's get these people signed up for that trading challenge.
Right. The live trading challenge. Did you pull up the website? I can't remember.
Yeah, I did.
Okay, cool. All right, so let's leave it at that. Everybody take care. Have a great day today, and good luck out there.
Thanks. Bye.